The Big Beautiful Bill Act is moving fast, and it could put thousands back in your pocket. Or drain your benefits without warning. Most Americans aren't ready, are you? Watch now before it's too late to protect your money. Remember to like and subscribe for more Money Smart Basics videos. If you have any suggestions for financial literacy topics, please leave a comment. Stay until the end to receive a bonus tip. Welcome back. Today we're diving into the Big Beautiful Bill Act, a sweeping new tax law that's about to shake up everyone's finances. This isn't just another snooze-worthy bill, it's packed with changes that could save or cost you big, whether you're a student, retiree, business owner, or gig worker. So grab a coffee and let's break down the 7 key things you need to know to survive, and maybe even thrive, under the Big Beautiful Bill Act. Let's get straight to it. The Big Beautiful Bill Act, or BBB Act, is being called one of the most ambitious economic packages in recent history. Its stated aim? Fostering growth, ensuring fairness, and simplifying taxes. But what does that actually mean for you, for businesses, and for the country as a whole? Well, buckle up, because this is no ordinary piece of legislation. In reality, the BBB Act is a sprawling, 1,000-page overhaul that touches nearly every corner of the tax system. It changes everything from how tax brackets are structured to what counts as income to the very forms you'll be filling out next April. If you thought taxes were complicated before, just wait. This bill is like a complete rewrite of the rulebook, with new chapters, footnotes, and asterisks everywhere you look. The government's goal with this act is to adjust tax rates to better reflect today's economy, and to modernize a tax code that's been patched together, bit by bit, for decades. Lawmakers argue that the old system was outdated, full of loopholes, and unfair to both individuals and businesses. The BBB Act is supposed to be a fresh start, a chance to make the system work for everyone, not just a select few. Think of it as a total system reboot. We're talking new definitions for what counts as income, new credits for families and small businesses, and entirely new rules for deductions and exemptions. The forms you're used to? Many of them are gone, replaced by new ones that promise to be streamlined, though whether they actually are is up for debate. Politicians promised that this act would make taxes as easy as ordering pizza online. Just a few clicks and you're done. But for most people, the reality is more like assembling IKEA furniture blindfolded, with half the instructions missing and a few extra screws thrown in for good measure. The intention was simplicity, but the execution? Well, let's just say it's complicated. The act covers a huge range of topics: individual and corporate taxes, retirement savings, digital income, gig economy earnings, and even how cryptocurrency is reported. Whether you're a business owner, a retiree, a freelancer, or just someone with a side hustle, there's something in here that affects you. It's a legislative buffet. There's something for everyone. But it's easy to get overwhelmed by the sheer number of options, rules, and exceptions. You might find a new credit that helps you, but you'll also have to navigate a maze of new requirements and paperwork. Take dependents, for example. The bill's so-called simplification actually introduces 3 new subcategories for dependents, each with its own set of qualifications and paperwork. So while the language is about making things easier, the reality is often more complex than ever. The process to pass the BBB Act was pure political theater, endless debates, last-minute amendments, and backroom deals. What emerged is a Frankenstein's monster of compromises, with pieces stitched together from every side of the political spectrum. For every benefit the bill offers, like expanded credits or lower rates for some, there's a new headache, like additional forms, stricter reporting, or confusing new definitions. It's a constant balancing act between what you gain and what you have to deal with. The stated goal is fairness and growth, but the real story is one of complexity and negotiation. Every line in the bill represents a compromise, and every compromise adds another layer to an already tangled web. So as we dig into the details of the BBB Act, remember, the vision may be beautiful, but the details are anything but simple. The fine print is where the real story lies, and it's not always pretty. So, what does all this mean for you, the taxpayer? Over the next few minutes, we'll break down the key changes, the hidden pitfalls, and the opportunities buried in the Big Beautiful Bill Act, so you can be prepared, not just surprised. Who's affected by these sweeping new tax changes? The short answer, pretty much everyone. Whether you're just starting your career, raising a family, running a business, or enjoying retirement, the new tax rules are set to touch nearly every corner of American life. This isn't just a minor update, it's a full-on tax party, and your invitation is already in the mail. Let's start with middle-income families. You're front and center in this new tax landscape. The government is rolling out new tax brackets and expanding the child tax credit, which sounds great on paper. But, as always, there's a catch. More paperwork, more eligibility requirements, and more steps to actually claim those benefits. It's a bit like getting a bigger slice of cake, but only if you can solve the puzzle to unlock it. Families will need to pay close attention to the fine print to make sure they're not missing out. Now, gig workers and freelancers, your Wild West days are coming to an end. The Build Back Better Act brings in stricter reporting requirements and even redefines who qualifies as an independent contractor. If you've been used to flexible, under-the-radar income, it's time to get organized. The IRS wants a clearer picture of your earnings, and the rules are tightening up fast. Platforms like Uber, Lyft, Upwork, and DoorDash are now under the microscope. They're required to report more details about your income, and you'll need to keep meticulous records of your expenses and deductions. Forget the shoebox full of receipts. Digital tracking is the new normal. If you're not careful, you could end up paying more than you owe or missing out on deductions you deserve. Small business owners, you're not left out either. There are new deductions available for equipment purchases and hiring new employees, which could help your bottom line. But there's a flip side. The rules for pass-through income are more complex than ever. Navigating these changes could feel like a compliance nightmare, with more forms, more documentation, and more chances for costly mistakes. Retirees and investors, don't tune out just yet. The age for required minimum distributions from retirement accounts is shifting, which could impact your withdrawal strategy. On top of that, capital gains taxes are changing, especially for high earners. If you're living off your investments, you'll need to revisit your financial plan to avoid unexpected tax bills. For those relying on retirement savings or investment income, these changes could mean rethinking when and how you withdraw funds. A misstep could lead to higher taxes or penalties, so it's crucial to stay informed and proactive. Low-income individuals and families are also in the spotlight. The Earned Income Tax Credit is getting a boost, making it easier for more people to qualify and receive larger refunds. This could be a game changer for those struggling to make ends meet, offering a much-needed financial cushion. And for high-net-worth individuals, the party just got a little less fun. There's a new surtax on the table, and several popular loopholes are being closed. If you're used to sophisticated tax planning, you'll need to work even harder to keep more of your money. Uncle Sam is looking for a bigger slice of the pie, and the rules are designed to make sure he gets it. So whether you're a salaried employee, a gig worker, a small business owner, or a retiree, the Build Back Better Act has something in store for you. No matter your income level or occupation, these changes are reshaping the way Americans interact with the tax system. Don't make the mistake of thinking you're unaffected. The reality is, everyone's in the game now. The rules have shifted, and the impact will be felt across the board, from the way you file your taxes to the size of your refund or bill. The key to navigating this new landscape is understanding exactly how these changes hit your specific situation. It's not enough to rely on last year's strategy. What worked before might not work now. Take the time to review your finances, consult with a tax professional if needed, and make a plan that fits the new rules. Are you getting a break or a bill? The answer depends on your unique circumstances, your income, your family situation, your investments, and even your side hustles. Some will celebrate a bigger refund, while others may be surprised by a higher tax bill. The only way to know for sure is to dig into the details. Don't wait until tax season to find out where you stand. Start gathering your documents, reviewing the new rules, and making adjustments now. The guest list for this tax party is long, and the rules have changed for everyone. No matter who you are, you're on the list, and it's up to you to figure out how to make the most of your invitation. So, what's your role in this new tax landscape? Are you prepared to adapt, or will you be caught off guard? The more you know, the better you can position yourself for success. Let's get you ready to play it smart. With the right information and a proactive approach, you can turn these changes to your advantage and avoid costly surprises. Here's what you need to do next. Review your situation, seek advice if needed, and stay ahead of the curve. The tax party is underway. Make sure you're ready to dance to the new tune. Now let's talk about timing, because when it comes to taxes, missing a deadline isn't just a minor slip-up. It can cost you money, trigger penalties, and create a lot of unnecessary stress. Deadlines are the backbone of your tax planning, and understanding them is the first step to staying ahead. Whether you're a freelancer, a small business owner, or planning for retirement, knowing what's due and when is crucial. So let's break down what you need to know, and how you can use your to-do list to stay on track and avoid last-minute panic. Most of the major changes from the BBB Act will take effect for the tax year starting January 1st next year. That means the return you file after this year will be under a whole new set of rules. It's not just a matter of flipping the calendar. These changes could impact your deductions, credits, and even how you report your income. If you're used to doing things a certain way, now is the time to get familiar with what's different, so you're not caught off guard when it's time to file. That means right now is your window to plan and act. Don't wait until the last minute. Use this time to get organized, review your finances, and make any necessary adjustments. A well-prepared to-do list can be your best friend. Start by jotting down key dates, tasks, and any questions you have about the new rules. The more proactive you are, the smoother your tax season will be. If you're a gig worker, pay special attention. New reporting requirements kick in starting July 1st. This isn't just a minor update, it changes how you'll need to track and report your income. Whether you drive for a rideshare company, deliver food, or freelance online, you'll need to be extra diligent about your records from that date forward. Any income you earn after July 1st will be subject to stricter tracking and reporting. That means it's time to update your information, organize your receipts, and make sure your financial records are up to date. Consider using a spreadsheet or a dedicated app to log your income and expenses. The more detailed your records, the easier it will be to comply with the new rules, and the less likely you'll be to face an audit or penalties. For small business owners, there's another key deadline to keep in mind. The cutoff to take advantage of the new equipment expensing rules is December 31st. If you're thinking about upgrading your computers, buying new machinery, or investing in other business assets, you'll want to make those purchases before the end of the year to maximize your deductions. This is a strategic decision. Should you buy now and claim the deduction this year, or wait and see how next year's rules might benefit you? Review your business's cash flow, talk to your accountant, and weigh the pros and cons. Sometimes making a purchase before the deadline can mean significant tax savings, but every situation is unique. Retirees, listen up. The age for required minimum distributions, or RMDs, has been pushed back. This gives you more flexibility in managing your retirement accounts and can help you better plan your withdrawals to minimize taxes. However, if you've inherited an IRA, new rules are already in effect. These changes could affect how quickly you need to withdraw funds and how much you'll owe in taxes. It's important to review your options and make a plan, especially if you're managing an inheritance for the first time. If you're inheriting assets or planning your estate, don't wait. Meet with a financial advisor or estate planner to make sure your strategy aligns with the new laws. Early action can help you avoid costly mistakes and ensure your wishes are carried out smoothly. So, what should you do right now? Start by gathering all your financial documents: pay stubs, investment statements, business records, and last year's tax return. Having everything in one place will make it much easier to spot what's changed and what you need to update. Next, make a checklist of which BBB Act changes apply to you. Are you a freelancer, a gig worker, a small business owner, or nearing retirement? Write down your specific situation and the deadlines that matter most for you. This checklist will be your roadmap through the new tax landscape. Are you a parent with dependents, a business owner with employees, someone approaching retirement age? Make sure to note every category that fits your life. The more detailed your list, the less likely you'll miss something important. Think of this as your personal cheat sheet, a quick reference you can use throughout the year. Pin it to your bulletin board, keep it on your desk, or save it on your phone. Whenever you have a question or need to make a decision, check your cheat sheet first. Most importantly, schedule a meeting with a qualified tax professional. The BBB Act is complex, and professional guidance can help you navigate the changes with confidence. Don't wait until tax season. Get on your accountant's calendar now, while there's still time to make adjustments. Bring your organized documents and your checklist to the meeting. The more prepared you are, the more productive your conversation will be. Your tax professional can help you identify opportunities, avoid pitfalls, and create a plan tailored to your needs. Don't be afraid to ask questions. Start with the basics. How does the BBB Act affect me? What specific steps should I take before the end of the year? Are there any new deductions or credits I should know about? Ask your advisor what you should do before year-end to maximize your benefits and minimize your tax bill. Year-end planning is more important than ever with these new rules, so make sure you're not leaving money on the table. Don't try to DIY your response to a major tax overhaul. The rules are complicated, and a small mistake can lead to big headaches down the road. It's easy to get overwhelmed, but you don't have to go it alone. Professional advice now can save you a world of pain later. A good tax advisor can help you avoid costly errors, find hidden opportunities, and give you peace of mind as you navigate these changes. Remember, the clock is ticking. Don't wait until tax season to get ready. Every day you delay is a day you lose to plan, prepare, and take action. The earlier you start, the more options you'll have. Take action now, and you'll be ahead of the curve. Being proactive means less stress, fewer surprises, and a better chance of turning the new rules to your advantage. The BBB Act is complicated, but with the right preparation, you can make it work for you. Read up on the changes, ask questions, and don't hesitate to seek help when you need it. Stay organized, stay proactive, and don't be afraid to ask for help. Set reminders for key deadlines, keep your documents in order, and check in with your advisor regularly. Your financial future depends on what you do today. The steps you take now will set you up for success, not just this year but for years to come. Make your to-do list, stick to it, and keep your goals in sight. Let's make sure you're ready. With a clear plan, the right support, and a proactive mindset, you can face tax season with confidence and turn these changes into opportunities. That's the Big Beautiful Bill Act in a nutshell. Complex, far-reaching, and coming soon to your tax return. The key takeaway: taxes are always changing, and staying informed is your best defense. This video is a starting point, not a substitute for professional advice. Your situation is unique, so talk to a certified tax pro who can tailor a plan for you. Thanks for watching. If you found this helpful, hit like and subscribe for more clear, actionable financial tips. Now go schedule that meeting with your accountant. You've got this. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. Adjust your W-4 or estimated taxes now to maximize your paycheck. Since ABBA lowers taxes on work income, tips, and overtime, many workers could see smaller tax bills or even refunds. But you don't have to wait until tax season to benefit. Go to your employer and update your W-4 withholding to reflect the lower tax rates. This means more take-home pay each payday, rather than waiting for a refund. Bonus: if you're self-employed or work in a tip-heavy industry, start setting aside a portion of your extra take-home pay to build an emergency fund or invest it early, before spending it all. The information provided in this content is for educational and informational purposes only and should not be considered financial, legal, or tax advice. Always consult with a qualified financial advisor, tax professional, or legal counsel before making any financial decisions. The creator of this content is not responsible for any actions taken based on the information provided. Investments and financial decisions carry risk, and past performance does not guarantee future results.